Welcome, everybody, to the Retire Young podcast. And this is the podcast we talk about a number of different topics. We talk about, different lifestyle choices from fitness to the financial markets to sports. Today, we're going to talk about the financial markets. And I have a very special guest. As you know, I bring a lot of guests on this show. But this one is a little more special in particular because Trader Merlin, host of the Trader Merlin show, Merlin Rothfeld. How are you doing today, Merlin?
Fantastic, John. Thanks for having me.
Yeah, it's great to have you on the show here today, the podcast. And, I want to get into the financial markets, how they work, but just what's really happening in these markets. Because there's a lot of volatility. Volatility has been back for quite some time now.
Yep,
we're seeing some major swings. Just give me a little recap on what's really happening with these financial markets.
I mean, at this moment in time, you're dealing with a market that's completely driven by uncertainty. And for most people, they hate uncertainty because it means you just don't know where the hell things are going to go. For someone like myself, I love uncertainty because what that means, as you pointed out, is volatility. And the more that things move, the more opportunity there is. The bigger the swings, the more meat on the bone there is, so to speak. So I'm a huge fan of the volatility. Right now with the coronavirus, with the Fed, with the government, with stimulus, with trade, with all this stuff, that certain uncertainty is off the charts. And to me, it reeks of opportunity for those that understand it. But for many people, it's just fear. And also, again, fear is one of those drivers as well. It just adds to this volatility. So it's a tremendous kind of one-off time that I've never seen before.
Yeah, you mentioned a couple of things. You talked about the stimulus, but you mentioned the Fed. Now, do you think there's driving a lot of this market is pumping so much money in with the stimulus and everything?
Sure. I'm a numbers guy. So let's break it down to just basic numbers. Right now, the market's down about, let's say, roughly 10%, just to make it an easy number for people.
Sure.
If you look at the GDP of the United States of America, that's how much we produce as a society, goods, services, everything all in. And, the numbers vary depending on which report you're looking at, but I'm going to use $22 trillion a year as that number. So $22 trillion is what we produce as a whole. And all of a sudden, we've been home quarantined, right? Living in our homes and can't go out and go shop or go to sporting events or travel like we used to. So obviously, things are getting hammered. And you're seeing airlines down with regards to sales. They're actually negative 100% plus on sales because people have already booked flights, are now cashing in. So some industries, some market cycles are getting absolutely clobbered. Well, if we produce $22 trillion a year worth of goods and services, the Fed has already put in $3 trillion, and the U.S. government's put in $2 trillion. So you've put in $5 trillion already into our economy, and now the Fed is talking about another $3. That makes $8 trillion put into our economy. So for those of you who are fearful, like myself, and think that we're headed for a absolute shit show and this market's going to completely collapse at some point like the Great Depression, which I do believe we're going to see something similar, it's hard to argue that the markets aren't going to keep going up simply because you've already put in over 30% of our annual GDP of America in 2 months into the economy. So that's what the Fed and our government's doing. And I would argue it's rightfully so. They should be doing something to help out. But I'm also a free market capitalist, which believes we should let the markets do what they need to do and sort itself out so we can learn from that in the future. I don't know if you caught Powell's interview on Sunday on 60 Minutes, but Powell said, we can print and do whatever we want and keep putting money in the economy. We don't need to worry about the deficit at this moment in time. And I just had to shake my head, go, you gotta be kidding me. How much further down the road are we gonna kick this bucket? And this bucket is now like, a grain silo, how big it is. And I'm worrisome for the future. At some point, this house of cards is gonna come crashing down and it's not gonna be pretty.
You're right. I mean, we had quarter one earnings and it actually started to go up after that. I mean, when we have more earnings that come through, do you think that's going to really trigger another downturn in this market? Or what do you think is going to trigger it down? Because they keep pumping it up.
They do. And it's hard to believe that it's just still going up like this. I mean, I saw the latest retail sales numbers down negative 16.4% on retail sales. That's never happened in history. That's never happened. And it's happened in such a short period of time that the ripple effects from this, we'll call it economic crisis, which I believe it is, that is going to take some time to filter through our economy. So right now, I think that people are being a little overzealous about a cure. They're being overzealous about, hey, we'll just flip a switch. The markets will go right back to normal and everything will be just the way it was. I assure you they will not be exactly the same way that they were before. And we still have a lot of time for this economic data to filter through. So I agree with you. I think that Q1 was kind of a let's wait and see. Okay, there is an impact on earnings because Q1 was really only impacted by coronavirus for 1 month or less.
Yeah.
Now we're going to get into Q2 earnings, which can be April, May, and June, which have been fully impacted by it. And we already saw some earnings numbers that were just appallingly bad. I mean, yesterday you had Kohl's come out. They missed by like 95%. You had Urban Outfitters. They had a 377% miss. Right, they were supposed to come out at, I think it was like 19 cents, and they came out at negative, a buck 90 or something. I mean, just horrible earnings. That's with small impact. Imagine what it's going to be like with 3 months of quarantine. I think Q2 earnings are going to be the one that makes the market just shit the bed.
You're right. But as a trader or investor, does it really matter what the market does? I mean, we get opinions, but you got to go off the facts. So, I mean,
you do. And that's the challenging part. Obviously most people are trained and taught to be a buy and hold investor. So they're thinking, I'll just buy it, I'll hold on to it, and it's going to go up over time. And you're probably right. If we were to look down the road 10, 15 years, yeah, the market, S&P right now, let's say 29.64, it's going to be much higher than that. But that's 10, 15 years. Could the market theoretically drop 50% from here? Could we see the S&P at 1,500 by the end of the year? I believe so.
Yeah.
It doesn't mean that America is dead. It doesn't mean we've lost our power as an economic powerhouse. What it means is we've had a systemic failure or a shock to the system. Think of it like a little bit of a heart attack. Yeah. It's not the end of your life. You just change from that moment in time and you fix things that weren't working. But I do think that there's going to be a much bigger downside move here simply because we are in this one-off situation, and there's some businesses that will never come back from this. You're seeing bankruptcy filings already start to climb. I think you'll see that peak around July, August, September as a lot of small businesses just say, we're done. This isn't it.
Yeah, it seems like it's just been a slow trickle is what's happening. I think Pier 1 finally said they're closing their doors yesterday. It's, they've been having issues anyway, but that's just a start of it. Now, with everybody staying at home right now, I want to talk about oil a little bit because, I mean, I know you've talked a lot about oil on your show, and we have, the country, no one's moving. Do you think that's driven some of this drop in oil? And then what do you think in the future could it potentially happen as people start going back to work and people are starting to use that commodity?
I think you had kind of a perfect storm with oil, to be honest. It was, really started off with the Russians and the Saudis and their little pissing match. And then that started a little bit of a price war. Step number one, and personally, sometimes I can be a conspiracy theorist. I think that this was actually orchestrated in an attempt to shut down U.S. frackers, right? So let's get rid of the U.S. oil production because they were now the number one oil producers in the world. So America, we can remove you easily because your cost of production of a barrel of oil was, I believe, right around $35.
Yeah.
So if we can get it down below 35, American producers are dead in the water. Mission accomplished because we made it down to $6.50 a barrel on crude oil. Oh, unless you look at the CLK futures contract, which went to negative $40. But yeah,
that's a whole other story there.
That's a whole other show right there. So I think it started as that, and then it started to snowball from there. Obviously, if we're not traveling as much and, consumption of it just falls off a cliff, and then you add in, the slow growing factor of electric vehicles, obviously demand for oil is going to slowly start to decline. You have this kind of perfect storm, which just shattered the price of oil. And I'm actually really upset because my trading platforms back on the 20th of April and 21st of April, they shut off all trading on futures to retail customers. So all of a sudden here you can't trade crude oil futures when I'm thinking $6.50 on crude oil, and I'm sitting there hitting the buy button at $7.50. Like, come on, please, just let me get one contract.
Yeah, it's almost a no-brainer.
I really felt it was going to go much higher. I did not see oil going to zero. We're not going to all of a sudden stop using oil. I've been calling for 35 on my show for a while now, and I think we're going to hit that. We're at 33, so we're very, very close. At that point, you'll probably see oil take a little bit of a sell-off, but I think long-term, you got to stay bullish on oil. We are a fossil fuel burning world, and as the U.S. shifts to electric vehicles, that's fine. But a lot of foreign countries are still deeply, deeply fossil fuels, and I think that's going to continue.
Yep, exactly. I want to pick your brain a little bit about cryptocurrencies. You're kind of a guru of cryptocurrencies. You've been invested you have invested in those for a long time, from my knowledge anyway. And just what do you think the long-term, perspective of Bitcoin and Ethereum or Litecoin, some of the major ones, what do you think can happen here in the next 5 to 10 years with cryptos?
Well, I appreciate the comment, but I'm certainly no guru. I understand it probably better than the average bear, but to call me a guru, that's a stretch. Look, I'm fascinated by new technologies and innovative products that come in that could potentially create a paradigm shift in the way that we live or function. And cryptocurrencies, to me, are one of those. And it has to do with, I mean, from my perspective, at least my opinion is, it has to do with trust factors. And I'll give you a basic example. Right now, everybody who's watching this program, listening to this program, has a bank account of some sort. And you are trusting that bank to keep an accurate account of your information. I know people are probably out there using their credit cards and charging stuff. Do you actually go through and check every single transaction, add them up, and make sure that their numbers are right? We don't, right?
I know I don't.
Right? We take it for granted. God, when I was in school, my teacher, we had a class on balancing our checkbook. People don't balance their checkbooks anymore. We trust the bank.
Yep.
Well, that's a centralized entity. Your bank owns that database. And if they mess up, I mean, I think Office Space, or there was a movie about it where, you know, the guy rounds up a penny. And he just steals a penny from everybody, and all of a sudden it's trillions of dollars. Well, it wasn't trillions in the movie, but it's a lot of money. Look, they could be adding on a dime worth of charges, and I wouldn't even notice. Neither would you. I mean, 10 cents, who cares, right?
You're not going to see it.
You're not going to see it. And that's a trust factor. Also, if I'm a hacker and I want to go after someone's database, I could go straight to the source like Experian or Equifax, which got hacked, and I can get everybody's social security number. So there's this vulnerability to having all the information in a centralized location. Now, this would be an eye-opener for a lot of your listeners, is if you own, let's say, 1,000 shares of Microsoft, and you have it at a Charles Schwab account, you're thinking, cool, I got 1,000 shares of Microsoft at Charles Schwab. The truth is, you don't. Your shares are not sitting at Charles Schwab, and they're not even in your possession. They're actually at a company called the DTCC, which is a government-created entity, and the DTCC is responsible for being the caretaker of all of those shares. Well, a few years ago, I believe it was 2012, the company Dole was bought out, and I'm using numbers in my head that are foggy right now. I got a lot of info in my head, but I can't remember the exact figures. But
sure,
they misplaced millions of shares of Dole. So
I heard about that.
Was when Dole was bought, and I'll use numbers that I can think of off the top of my head, which is, let's say that there was 30 million shares of Dole, right? So the company comes in and says, all right, we're going to buy 30 million shares of Dole at $10 a share. That means we'll pay $300 million for this company. That's it. Okay, great. Well, when it all was said and done, something like, let's see, there was 30 million shares. There was an extra like 12 million shares were claimed, meaning people said, I have this in my account. I have shares of Dole. How do you get an extra 12 million shares? Because the DTCC screwed up in its accounting. And I was making jokes like, what's a Christmas program like at the DTCC, right? The guy's walking by, hey, Josh, good job this week. Here's 1,000 shares of Apple, and here's some Microsoft for you. Like, just flopping it out because no one knows. No one keeps track.
Everybody, like Oprah.
Oh, yeah, here, have some shares.
Yeah.
So the whole point of that winded story is when you have something like Bitcoin, and we can talk about different cryptos, but Bitcoin is really what started it all. And it's a decentralized ledger where instead of one person controlling it, you have thousands of computers around the world all having the same database. So if you were a bank and you were decentralized, everybody could have your record. So I could have Josh's bank account information, but I wouldn't know it was yours, right? It would just be a huge string of
like
numbers
a
to me.
50 digit number, isn't it?
Yeah, it's ridiculous. And it's numbers, letters, whatever. It's crazy. You would never know who it was, but I would know that that account has this money. That's all the system cares about. And the way that transactions come through, the way they're validated is just brilliant. So you don't get false entries. You don't get theft. I guess technically there is a way to get theft, but it's mathematically, there is a possibility, but it's such a strong string of characters. Your chances of finding the access code to someone's bank account are like me putting that account number on a grain of sand, throwing it on a beach out here in Newport Beach, and then covering the world in a 50-foot layer of sand, and you have to find that one grain. And that's how that many possibilities there are. There's just no way you'd ever find it.
Yeah.
So to me, it's brilliant because it takes the trust factor away from centralized entities. And if you look at people who have risen to power based off of buying centralized entity, Warren Buffett comes to mind. He owns Geico, right? Geico, that's what it's all about. They're a centralized database of tons of information. If we decentralize this, you kind of give the power back to the people, and there is no need for an eBay. There's no need for a Geico. There's no need for Experian or Equifax or lending programs or banks because you can do all of that in a decentralized network. So to me, my brain says that's the future. Why do we need all these institutions who many of us view as being corrupt, dishonest, greedy, stealing from us, and move that away from them and put the power back on the people? To me, that's what Bitcoin opened the door to do.
And they're going to fight that because they want the control. They want to manipulate the dollar,
sure,
or the currency. So,
well, that's two separate things. They're going to fight that because they want the power of having that centralized database. That's where the money is, right? I mean, if you look at, even I'll use Trader Merlin, right? Somebody was asking me if they could buy my database. I'm like, first off, I don't keep a database because I'm not trying to make money off of the leads, but that's where people make their money, is the database of subscribers, right? Oh, I'll sell you this.
Sure.
When you have it decentralized, that power is no longer on the person who keeps the database because everybody has it. It loses its value. So to me, I think it's a great thing. Now, you mentioned controlling the dollar. That's actually taking a step back and looking at the Fed.
Yeah, you're right. Yeah.
The Fed obviously has a monopoly on the U.S. dollar. It's illegal to create a competing currency, which is rather interesting given what Bitcoin is. I would call it a competing currency. They're saying it's a commodity just to skirt that legal side.
Yep.
But as we look at the control and what the Fed is doing right now, just making trillions and trillions and trillions of new dollars to help support this market, what's interesting is with Bitcoin, you cannot do that. It has a maximum of 21 million. Now, let's be clear, not all cryptocurrencies are the same with regards to that, right? Bitcoin, in theory, they could raise it, but it'd have to be a consensus by everybody in the network, and that's probably not going to happen. There are some that have billions and tens or hundreds of billions of currency out there for cryptos. So, you look at Ripple. Ripple is a transactional cryptocurrency people want to use, really more for bank settlements and transferring of funds around the world instantly, very quick. No borders, no extra fees. There's 100 billion Ripple out there, whereas there will only ever be 21 million Bitcoin. So, once you dive into how the mechanics of these cryptocurrencies work, there's certainly advantages and disadvantages. Now, if our economy was run on a digital currency, something like Bitcoin, which had a ceiling, then we would be in a much different place right now. We probably would be struggling significantly because we wouldn't be able to print money to infinity and beyond, as Powell says. We wouldn't be able to do that. So our economy would be in a much tougher place, but it would be better for it in the long run.
Yeah. So just kind of keeping on that topic now, Bitcoin just had and I can't remember the term, basically the same thing as a split, not the fork, but the
it's called a halving.
Halving, yes, there you go. So now with them doing that, and I believe the amount of Bitcoin is going to be consumed basically at around 2030. Is that about where that's sitting now? With that halving and people getting less Bitcoin for their mining, wouldn't you think that would slow that down?
So yeah, so let's make sure it's not, if you don't get it confused with a split, because it's certainly not a stock split.
Yep.
What it is there's an emission curve, and it's the amount of Bitcoin that comes into circulation. It starts off very steep because you want to get as many Bitcoin into circulation quickly. And then the people who are maintaining the network, which are called miners, they are rewarded for every block of data that they solve. There's a block of data solved every 10 minutes. So every 10 minutes, right now, it's 6.25 Bitcoin is the reward.
Yeah.
So there's an incentive for these guys to maintain a network. 2 weeks ago, it was 12.5. So about every 210,000 blocks of data, which is about 4 years, the reward for miners is cut in half. That's called the halving, which means that now the release or the creation of new Bitcoin has been cut in half. And that will continue until like 2140 something. I mean, it's going to go a long time. So you get decades to do that. Actually, I was just pulling it up here because I want to remember the date. If you go to my YouTube page, which is YouTube.com/Trader Merlin, if you click on the playlist, I created one, which for those who are interested in this, it's called Chart of the Week is the playlist. Let me see real quick. It's called Chart of the Week, and then one of them is all about halving of Bitcoin.
The chart of the week here. Now, the last 2 weeks that I've done this, it is...
Sorry, I don't need audio. God, I can't remember which one it was. There's retail sales. I believe it was the 11th of May or the 9th of May, somewhere in there.
Okay.
But that one, I think it's the 9th of May. That one is all about the Bitcoin halving. So anyone wants to know the details, that's where it's real, the nitty gritties in there. But it's a brilliant move. I actually just took my hat off to the guy who created it because if you think about it, if Bitcoin gains more popularity, the price is obviously going to go really, really high. And therefore the emission or release or the reward for the miners they don't need 12 Bitcoins now. Even getting 6 would be a lot. So
Yeah, it's because price is higher.
it's going to be much higher. Yeah, and I think, I'm one of these guys that think Bitcoin's going to go significantly higher. This is, Bitcoin is something the government cannot take away from you. They can't come in and just shut it down. They can't say, oh, well, we're going to seize it. They can't. Unless they have your private key, there's no way they can touch it. So to me, it's absolute brilliance. And unless they control, over 51% of the entire network, there's nothing that they can do about it. And that's governments around the world. So, if you're like me and you are extremely skeptical on our political leaders or the way we move, whether you're Democrat or Republican, doesn't make a difference. Yeah. Governments around the world are shady and you need to not trust them. Cryptos or Bitcoin is definitely a way to help keep your capital in a safe place.
Yeah, you're exactly right. You got a lot of knowledge in so many different, in commodities and stocks and the cryptocurrencies. How did you get started trading and investing? I mean, it almost sounds like you're sitting at your computer all day long and reading everything. You have so much knowledge. How did you get started?
And I will correct you. I have not been. I don't sit at my computer all day long, and I don't really read much out there because I think a lot of there's certain sites or resources that I use that I trust, but we are living in a fake news age, and who knows what to believe nowadays from these various websites. I got started 98. I actually was working for a financial planning company, and I saw the way that some of the business practices were done and the disinterest in customer success. It was more about the firm's success. They're pitching mutual funds that had all these crazy fees on it when they didn't need to be doing that. And I don't know. I was, I don't know what to not to displease. I'm trying to find the right word. I was disenchanted. There we go. I was disenchanted with the industry because I thought, being a financial advisor would be so great because now I can help people achieve their financial goals. It helps me achieve my financial goals with regards to investments. I love the idea of taking money and making more money with it. But once I got behind that curtain, like the Wizard of Oz, I was just completely disenchanted with it and said, this is almost corrupt and not in the client's best interest. So a friend of mine sent me an article. It was Forbes magazine, talked about day trading, which was a brand new thing back in 98. I researched. There were 3 schools that offered day trading. One of them was Online Trading Academy in Southern California. So I took a trip down there on spring break and saw what was going on. Was kind of amazed at this new technology. I ended up taking a class and, I worked for them for a long time and learned a lot more. Met a lot of great traders, but I don't know. I find it fascinating just how this machine works. It's kind of like opening up a watch. As soon as you open up an old watch, not these new crappy digital ones, but the old one with the wheels, as soon as you open up, you realize that there's all these pieces in it. If I just learn everything I need to know about that one small little piece, that's great, but I'm missing a bigger picture, which is how the whole thing functions.
Yeah.
So, there's still an infinite amount of information that I still need to learn, but I find it enjoyable to learn about how the different wheels in that watch are functioning because one impacts the other. And on certain occasions, one will be much more impactful than the other. And you need to know when to turn off this piece or focus on that one. And to me, that's really the essence of trading and investing.
Yeah, you're exactly right. There's a big picture, then you just got to break it down. And I mean, you're hosting the Trader Merlin show. Do you have any special projects that you're working on besides that right now?
Not really special projects. I mean, I'm doing a lot with Online Trading Academy, building content. Right now I'm working on a thing called the Strategic Investor, which is something that everybody should take. I'm telling you, it's one of these things where we are told by financial institutions what to do with our retirement. I mean, told what to do with our investments. And quite often that is wrong because they just say buy and hold. And the Strategic Investor really breaks down. It starts off rather basic, which is, look, here's the choices you have in, let's say, a 401k plan. Do you know how a 401k plan works? Because you're probably paying way more in fee. You're probably losing 2 to 3% a year just by doing the wrong things. And if you make one minor little change, saving 2 to 3% per year all of a sudden starts to add up since our retirement accounts are there for 30, 40 years. So we start there and kind of dive deeper. Once we get the basics of the investment choices that you can usually make in a 401k, then we go back to self-directed, which is really where you should be. We start looking at obscure investment vehicles that have a place, but also have a ton of risk. For example, some of your listeners might be in life insurance products or annuities. These, while they sound great on paper sometimes, have some huge drawbacks, and it benefits the firm or insurance company that sold you these products. That's generally the way it works. So the goal of the class is say, look, here's how, let's say, an annuity works. And there's a variety of different kinds. We'll save that for another day. But here's how an annuity works. here's all the red flags you need to be aware of if you're going to go to an insurance broker and buy an annuity. Better yet, why don't we show you how to create your own, so you're not locked in long contracts, you're not paying a ton of fees, and it's just, to me, it's empowerment and letting people know there is a better way to do things. Stop listening to your financial advisors who are generally there to make themselves money first and foremost. And, it's spreadsheets, it's using all the different asset classes, like I said, life insurance products, you're talking bonds, and of course that could be corporate bonds, government bonds, municipalities, junk bonds, things like that. Move it into creating bond ladders, barbells, CD ladders, all these different tools and strategies to achieve your financial goals. And everybody says my goal is to get rich. That's not a logical goal. Most people should stop, sit down, and say, here, when I retire, how much money am I going to need to have the lifestyle that I want, right? And you got to be honest with yourself. Once you get that number, we're going to add to that, because you are probably not accurately forecasting healthcare costs as you get older and older. So now you've got a number, and you can say, okay, I can build a portfolio with a combination of 3, 4, 5, 10, 15 different assets that are going to get me a steady stream of income when I retire. You can never say guaranteed, but obviously that's going to be a much better probability of me achieving that rate of return as I enter retirement. And a lot of people don't do that. They focus on, I want to have as much money in my 401k as possible when I retire. That is absolutely the wrong way to do it. You can have $1 million in your 401k and pull it all out at once, and now you've got $500,000 left. Is that enough to carry you to your 90? Probably not.
Probably not.
So yeah, I love this class. I'm a strategic investor. I'm building on-demand versions of this right now, so we probably have that out in the next month or so. We finished part 1, and then which was 37 modules, and then the second part is gonna be 95 separate videos just on strategic investor.
Nice. Well, and here's the thing too, is people are being sold products, like you said, and that's the key words. They're being sold. But
Totally.
Can you hear me there, Merlin?
Yeah, I said totally. It's just, it is absolutely right. They're being pushed products.
Yeah. And you're going to be your own, your best steward of your own money. I mean, people believe that they're in it for their interest. Well, unless they're a fiduciary, they're there to make money for the company and themselves. So, it is important to self-direct your own accounts. That way you have your best interest. And what's funny is everybody's afraid of it. Everybody's afraid of managing their own money, but they're okay with giving it to a stranger.
Yeah. Yeah, it's a weird little conundrum out there. And if you understand the way that people have been taught, this is why, I have a really good friend, Dr. Woody Johnson, who will come on the program every now and again. He's a psychologist, and he's really about trading psychology. And if you understand the way that people think or act or have been trained or conditioned, it's awesome. It's like Pavlov's dog. And salespeople know that. They take courses to understand, oh, they're going to react this way. Here's your counter, and here's how you sell them this product. Mm-hmm. The more that we know as consumers, as those that are consuming these products or services, the better off we are. And when someone comes to you and is trying to pitch you with some annuity that says, hey, I guarantee you that when the markets drop, you don't lose any money. And when they go up, you make money. It's like, wow, that sounds amazing. It's incredible. I want to do it. Yeah, it's almost too good to be true. Yes, annuities do exist where you don't lose money when the markets drop, but when the markets rally, you get a fraction of the market rally, and you're paying a ton of fees. So in the end, you're probably better off losing money when the markets drop. Yes. So, you don't know what you don't know, and most people are afraid to learn it. They shouldn't be. You should be excited to learn about this stuff. I every day I look and I'm fascinated and excited to learn something new, which is why I love doing the Trader Merlin shows, because I'll bring on, yesterday I had Tim Blotzer on, and he's got a strategy called the rubber ducky. Yep. And he talks about its different legs of an iron condor strategy, which for some of your viewers right now, they probably went, what the hell did Merlin just say in that sentence? I don't understand a word.
What kind of show is this?
What is going iron condors? Is this? It's not called an airplane, isn't it? No, it's just a simple strategy, which at face value is challenging. It might look difficult, but if you understand the mechanics, what it presents to you is a very high probability trade. It doesn't have a lot of reward, but it has very high probability. It's like 80-something%. Well, it depends on which option strategy you choose or strike price you choose. But he's looking for ones that give like 80% probability of working, and it's going to give him a small amount of money. And most people say, well, I want the one that's going to give me the most money. That's not the way to look at it. And everybody has to tailor their strategy. Tim Blotzer goes on just talking about that yesterday, and I loved it because I learned something new on every day. I try to learn something new every day and expand my understanding of financial markets so that I'm more prepared.
It's all about it. You can learn something every single day in the financial markets because they keep changing. sometimes by the minute. Hey, Merlin, I appreciate you coming on the podcast today. We can find you on Twitter at Trader Merlin. And what's your YouTube page?
I'm Trader Merlin on just about everything: YouTube, Facebook, Twitter, Instagram, all that stuff. And let me add one thing here, because this is one that's been chapping my hide lately. This the stimulus package everybody's getting. You know, they're getting like $1,200.
Yep.
If you guys are receiving a stimulus check and you decide to go out and buy yourself a TV or buy yourself some new headphones or a new hard drive for your computer, you're a freaking idiot. Stop it. Quit being a moron and spending money. I'm sorry. Now they're like, this guy's just a jerk. No,
it's
do what's right with that money. You should prioritize. Go right now, and everybody should do this. Go home, pull out a piece of paper, and say, here's everything that I own, or OWE. Here's my car payment. Here's my credit cards. And I want you right next to it to write what percentage you are paying. So if you have 3 credit cards, one of them has a 5% rate, one of them is a 10% rate, and one's a 20% rate, I want you to take that full $1,200 check and pay off as much as you can of that high interest rate credit card. Take that money, pay off your debt unless you absolutely need it to put food on your table. Don't go buy more stuff. Pay down your debt, get your credit scores up as high as possible, because when the cows come home or the chickens come home to roost and this market falls apart, you want a credit score that's as high as possible so you can get as much money as possible and buy everything when this market bottoms out.
You're right. I mean, I'm glad you brought that up, because really we already had a problem in this country with entitlement. Yep. But it's great that they're helping people out, but it's going to cause a problem in the long run, I believe. So you're exactly right on that. But I appreciate you coming on the podcast today, Merlin, and I hope to have you again soon. And so we'll always keep an eye on you on tradermerlin.com. And I think that's your website, isn't it?
Yeah, that's just basically a meeting point from there. most of the stuff I do is on YouTube. And then I'm actually building out a bunch more sub channels on YouTube. But if you go to youtube.com/Trader Merlin, or just tradermerlin.com is the easy way.
Got it. Appreciate you coming on the podcast, and I'll talk to you soon, Merlin.
Thanks, Josh. Looking forward to coming back on. Take care.